Investors and traders, welcome to the channel. Today is 25th of July 2024. Hope everyone is having a good day. This video we'll be taking a look at the key US markets. As always, this video is for educational purposes only and it is not a financial advice. There has been a fair amount of volatility in the US stock indices, mainly in the NASDAQ 100 and also S&P 500. Both of these indices actually reached a certain key levels that we had been watching for, and in particular the NASDAQ 100 actually completed a big one-to-one price projection pattern, which we like to call the ABCD. So we'll actually review that quickly. And since then we have seen over the course of a couple of weeks the market actually pulled back. So we'll be discussing key dates, what we're expecting, and key price levels that we should be watching for, which is going to give an earlier indication that what the market is likely to do next. So what we are taking a look at is the Dow Jones Industrial Cash Index, and here we have this key timing coming in, which is actually starting tomorrow. So there's a window of 2 days, 26th of July followed by 29th of July. So these are key timing dates to watch for. With respect to the 29th of July, we'll give it a couple of trading days on both sides. And what is really interesting to also watch is that today the market actually tried to rally and it filled this gap, but the sellers were just sitting around here and it just closed lower but closed positive. So that's an interesting observation. It also closed right at the 20 period moving average, and also closed pretty much right at the 38.2% retracement as well of the 17th of April lows to the recent highs of 18th of July. So interesting what the market is doing. And Dow Jones has been one of the stronger ones recently. So just to show you that, I'm gonna go to the finwiz.com, and here just to quickly show the different indices. These are cash prices. Dow Jones actually closed positive 0.2%. I look at NASDAQ down almost 1%, 160 points. S&P 500 down 0.5%, minus 27, minus 28 points. And look at Russell 2000, it was up 1.25%. So that shows you the nature of the market, where there's a fair amount of rotation happening, and all these high flyers, the tech related stocks, they are money is actually moving out of them and going elsewhere. And also I'm going to show you a very interesting chart of a Japanese yen, and what I think that why some of the things that we are seeing might be happening. So if looking at just at this heat map, we can see in the technology, Microsoft was a big loser, followed by Nvidia, and Apple also lost about 0.5%. And Amazon also lost about 0.5%, but Tesla was up nearly 2%. That's pretty interesting to watch. Google, excuse me, actually Google was, but it's under communication, but Google actually lost 3%, and Meta close to 2% as well. Really interesting is the energy sector, which is we can see mostly green around here, and here we can see the ExxonMobil closing about 2%. So that's interesting. So maybe the energy sector is getting some of the flows coming into it. So we'll also quickly take a look at this sector as well. Now, just moving to the charts, let's take a look at the NASDAQ 100. I'm going to quickly move to the weekly chart. Here we go. And that's the big pattern that I'm talking about, the ABCD one-to-one price projection that completed. And then for the past 2 weeks, although this week is not fully complete, the market has been pulling back, and it's actually pulling into key levels. And let me show you this. This is the chart for the weekly ranges based on the standard deviation levels. And what the NASDAQ has done is actually it has pretty much reached its came very close to its -2 standard deviation level. So it's definitely between the -1 and -2 standard deviation levels. And the S&P 500, I believe it actually came pretty close to the -1 standard deviation, if not it already reached that. We'll have a quick look at that as well. So let's have a quick look. What was the low today? 883. 3. So it's about 100 points shy actually of the exact minus 2 standard deviation level. So interesting one to watch. About 100 points lower is something this market could do. And if we just have a quick look on the September contract, because this is something which we are watching over the weekend. Here we go. So we have some timing specific to the NASDAQ 100 futures September contract coming in this week as well. So important one to note, in addition to the timing coming in from the Dow Jones Cash Index, and the key date for the NASDAQ one is actually around 5th to 6th of August. That's where I'm looking for this correction to actually conclude. The key level to watch on the price is 18,865. On a closing basis, if it closes below that, then in my opinion we might have seen a higher top of a higher degree, which means that we could have a deeper pullback. That certainly is possible. So now what we'll do is, let me actually also mention there is some support around here. We have the 61.8% retracement coming around 18,744, and some structural support obviously is around here as well. So let's now move to the daily chart for the NASDAQ 100 futures contract. And oh yes, also look at these trend lines, different trend lines around here. This one is when we join the lows. Actually, market put in a double bottom around December 2022. So that's when the bear market was over. It was over sometime in October. I'm just taking this low. If we just join this low in of October of 2023, we get a trend line coming around here. If we just take the October 2023 and join these, so the market is actually fairly close by, and it's also fairly close by to the minus 2 standard deviation level, and also the key level that we are watching for the market, for this market. So interesting to watch this. And then here we go. This is the daily chart, and on the daily chart what we can see is that this pullback has actually exceeded what we saw back in March and April. So it's about 10%. It's a fair amount of pullback happening, or correction as you would like to call it. But the interesting thing is that we have this ABCD pattern in the one I'm showing in brown lines around here. The actual endpoint is slightly lower, around 18,770. Certainly the market could get there. So we'll actually be completing that, and also pretty close to 61.8% retracement. Now let me actually see if we just go back to the lows of in October of 2023. If we have a 382 coming in around here. No, so the 38.2% retracement of the October lows is way much lower. So can't take that. Oh yeah, actually what we should do is I'll take the 23.6%. It's something which we rarely look at, but it's also been broken. So yeah, that possibility is there. The market could actually, that's gonna be, if it breaks out of those key levels, then most likely 18,366 on the NASDAQ 100 futures is gonna be the kind of level. Okay, but 10% pullback is where we are at the moment. We are also entering certain key levels which could act as potential support. Something which wasn't nice yesterday was actually the break of this trend line, and this is what we have seen a follow through today, with the pressure being down. But the market did try to rally, but all those gains were actually given up by the close. So that was an interesting observation. Now what I'm going to show you is something interesting. So let's bring up a chart of Japanese yen. So this is the US dollar versus the Japanese yen daily chart, and just by a visual representation, this is it kind of looks like what is going on in the NASDAQ 100 futures, the NASDAQ, the tech stock market. And the interesting thing is that it has had a correction of about, or a pullback of about 6.2%. It came really right at where we have this structural support from here and from here, and this actually massive down move started on the 11th of July, and this is where there was a report by Reuters. It was a suspected intervention done by the Bank of Japan, possibly, where they're actually trying to support the Japanese yen because it's become really weak, and that is causing a price pressure for the domestic prices, especially because on fuel prices, because that is something which is imported, and that is actually causing price pressure. Excuse me. So now the question is that what does that have to do with the kind of sell-off that we are seeing? So if we just go and add, let me actually add the NQ NASDAQ futures in a new pane. There we go. So that's where it is pretty interesting to watch. So here we can see that that's pretty much 10th of July or 11th of July. That's where we have seen the weakness to come in, start to come in. And here we have seen the market move lower, and we are also seeing the Japanese yen getting stronger against the US dollar. Now, why that might be happening? Because the Japanese yen is a lower yielding currency, meaning that the interest rates in Japan are actually out of the G7 countries. I think there might be zero or slightly above zero now, but they used to be negative. Whereas if you look at the United States or Great Britain or Euro, those are, interest rates are fairly higher. So those currencies are yielding a fair amount of money in terms of interest rates. Now, if there is a situation that you could actually borrow in a currency where the interest rates are super low, and then you have the chance to go and invest in assets where the yields are much higher. So what would you do? You'll have a really nice trade at your hand. You go and borrow in where you're not paying any interest, and then you're going and investing in a currency or another asset, could be stocks, where you're actually going to get a higher yield. So it makes perfect sense, right? That's called a carry trade. So what is happening is that with this Japanese yen getting stronger, it is actually putting a fair amount of pressure if the money was borrowed in the Japanese currency. So a lot of speculative flows, which if they had done that sort of carry trade and invested in higher yielding assets, which the artificial intelligence stocks, for example, or these big mega stocks in the United States, and they have to actually sell those positions because the Japanese yen is now strengthening. So that trade, might not be as lucrative for them as it once was. So what would happen? You will begin to sell those assets. So in my opinion, there is a fair amount of pressure coming in the tech stocks also because of the unwind of this carry trade. And with the kind of candle that we have seen form today in the Japanese yen, there is a possibility that from tomorrow we might actually begin to see some of these pressures actually get reduced, and that might actually then begin to lead to some sort of a bounce, at least a bounce in the markets, such as the NASDAQ and S&P 500. Certain stocks weigh quite a bit in S&P 500, and which could actually lead to at least a bounce. And it will be really interesting to watch that phenomenon if it does happen. And of course, we have got timing coming in from our technical models as well. And the reason I'm saying this is because if you look at this correction, it's pretty much close to what this correction was around here back then. And it is actually where the market closed is technically just slightly above the 38.2% retracement as well of these December 2023 lows. And it's a doji candle formation, which means that there were all those sellers who were here. The buyers came in and they moved the market a fair amount. If you look at The number is like one big figure they moved up. So that's a lot of buying power coming into this market, which is several times bigger. It's a currency market. I think USD JPY is the second most actively traded currency pair after the Euro USD. So there you go. Really interesting comparison, what we see around here. So I'm just going to go and delete this lower part. Here we go. So I think tomorrow will give us some really key information from a price action perspective. Now, just going back to, I should have done this actually, but if there is going to be a pullback, what can we expect? In fact, what could happen is, you see there's like a gap here. It's an open gap between the body of this candle, this little candle doji formation, and the top of this candle of 24th of July, which is yesterday. So the market could actually rally up till here, and then we'll have to see what the price action will bring for us, because over here that's gonna be about 50%. So it would have retraced pretty much 50% of this move. So it'll be like a market which is kind of a fair value, because it's the middle. It's 50%. So that is one possibility which exists. I think this is coming from the week before. So let me remove that. Okay, now let's move to the S&P 500 E-mini futures. Here we go. So this is the daily chart. Again, something really interesting happening here, because we have this ABCD pattern completed in the S&P 500 futures. Let me actually put in here we go, A, and that's our B. So it just completes this, and if we put in the leg C, then we get D. Now the interesting part with this one is that it has retraced about 5%, and the biggest correction that in this cycle since October 2023 for S&P 500 in the futures was about 7%. So a slightly different picture to the NASDAQ. NASDAQ is definitely weaker. It had been a leader, and the certain stocks which were the leader there, they're getting actually they're moving it now to the downside faster. And the other interesting part is that the price almost reached the -1 standard deviation level. So let me actually show it to you here. Our -1 standard deviation level 54.25 spot 50, and the market's low as of 25th of July has been 54.32 spot 50. So it's almost there. Certainly it could make few points lower. And another really interesting part is right here we also have 38.2% retracement of these lows right here to these here. Let me actually write it down so that just to put some emphasis on it. 382. Oops. Retracement. There we go. So really interesting stuff happening in the indices. There, the kind of levels they are reaching. NASDAQ 100 futures very close to the -2 standard deviation level. S&P 500 -1 standard deviation level. We have ABCD pattern there, and right at the 38.2% retracement at the S&P 500. So really interesting stuff happening. Now something which has not been very good, but which happened yesterday, is this break of this trend line. But if we do have this other trend line right here. Here we go. This is the bigger one, and we also get this trend line right here. So this trend line is basically from the lows of October 2023 to where pretty much the market actually went today. So there's a fair amount of support around here, and of course we have the timing as well from our timing model, so it'll be really interesting to see. The expectation is to actually by the close of the day expect at least a bounce. Now if there's gonna be a bounce in the S&P, in the NASDAQ, we were looking at about the 50% mark, and here we have a similar situation as well. We have a gap, so there is a possibility the market might actually try to get into this gap here in between that level as well, which is gonna be fine. And what the market actually tried to do today was come very close to the lows of this 55.40. And let me see if it was 38.2% retracement. Just a quick one. It just missed that 38.2% retracement today. So there we go. It came pretty close to that, but it might try to fill that gap. And while we're at it, let's have a quick look at the weekly chart. Here we go. And that is the box that we had drawn around 55.70. The market actually went a little bit higher and pulled back, which is fine. And if the support is held, we'll be watching this really carefully, because in the S&P 500 it has not completed this big ABCD, but the NASDAQ did. So that's why the NASDAQ is a little bit different. Now let's have a really quick look at the S&P 500 cash as well before we move to other indices. And here we go. About 5% lower. This one was about 6%, so not there yet. And of course this pullback happened from the 1.618 expansion at 56.35 of this lows around here. Let me actually go back to show you this. Here we go. So that 1.618 was basically an expansion of this entire bear market 2022 high to low. Okay, so the key thing is that look at this trend line here from the lows of October 2023, and the market is just there. So there is likely to be some support there as well. Now let's go back and take a look at Dow Jones Industrial. Oops, I think I got the wrong symbol. Let me put in the right symbol there. And this is the Dow Jones Industrial. We have already taken a look at the cash index right at the start of the video, and you can see that a different kind of a price action here. In fact, it looks much stronger comparatively speaking to NASDAQ. Right at the 38.2% retracement of these lows coming in from April. Structural support around here. So really interesting to watch. I think I've got the wrong standard deviation level. Let me delete that. So this is what we are watching, this 38.2% around 40,000 level really carefully, which might actually possibly act as support, because this is what it did today. So if I look at the low of 24th, which is yesterday, the low was 40,053, and this low was 40,055. So it just missed it by 2 points. Isn't that interesting? So this means that low was not probed. So very interesting, and it has actually closed. It's a little bit of that gap that I was talking about. Let me actually show it to you. Here we go. Boom. And there is very slight gap for this one. It's so hard that you need to be eagle-eyed to see that, but there was a little bit of a gap, and this is what the market did when it just closed that. Yet to happen for the S&P 500 futures and the NASDAQ futures. Okay, so now let's take a quick look at the Russell 2000. The video is getting a little bit longer. I wanted to take a look at Tesla and Apple, but we'll see. So you can see totally different kind of picture here. So this is where the rotational aspect is coming into it, that the money is actually moving out of high-flying stocks, tech stocks, and it's going to maybe these Russell 2000, for example. Really quick look at the New York Stock Exchange Composite here. Close positive as well. It just met our target here, at 1.618. So pullback not surprising. And this is the one which I really want to take a look at with you. This is what we saw on the Finway's website. We saw a lot of green actually in the energy sector. So this is what we have been following, and we see that there was this channel drawn. Uh, the market actually pulled out of it. This is normally what happens after a breakout, just pulls back to retest these. So retesting is upper boundary of the channel, and today was a pretty good day for the energy. So maybe that some of that money is which is moving out of tech is moving into energy sector. So a really interesting one to watch, and it's going to have another ABCD higher. All of this could be thought of as a bear flag formation. So in fact, this could be an ABCD higher. That possibility is still is there actually. So really interesting to watch and look at this one. This is a rig, Transocean Limited, and it had a really big, massive day today. It was up like 10%, 10.5%, and it's got, I think, the earnings coming out next week, 31st of July. So certainly something is happening in the energy sector. So a really interesting one to watch. Now let's take a look at the Tesla. I'm going to do it really, really quickly. Okay, here we go. Daily chart of Tesla, and here what we are looking at. Remember, I had drawn these lines because we had the resistance coming from the 78.6% retracement and the structure, and these were these open gaps, and the market hasn't fully closed this gap yet. But this is where the market has come into, and this is what we were expecting, and this is where the 38.2% retracement is. So around here in this region, in my opinion, is support, and with Tesla actually closing positive is actually a good sign. So there's a chance that, in fact, if we see the market goes sideways around here, it might be actually forming a higher basing pattern, the kind of pattern that are formed around here. Now the technicals for Tesla did improve, but it's really, in my opinion, when we look at it, that that's the big move that it had. It needs to really get above these $300 level, about $80 more, where a lot of strength will come into this stock. But it has improved a lot, technically speaking. But really key resistance around which just pushed it lower. Very quick look at Apple. So Apple has been pulling back, and I'm going to show you this pattern that we had been watching on the weekly chart. So it had actually completed our target, this ABCD in blue, right at the 237 mark. This is the target we had for weeks and months in advance, and it hit that. Now it is having that pullback, and of course, any pullback in Apple impacts the indices. Now it could actually go back all the way to about $200 per share level. That possibility is there. That would be about 50% of this move from the lows of around 163, 165 to 237. And we'll have good amount of structural support coming as well. So this is what we are looking at for Apple, and let me actually show you. This is the kind of market symmetry which is operating in this stock. And if we just take that and bring it around here, and there we go, 203. So that's the kind of zone I'm looking at. Let me actually draw it like this. And so this is where the Apple could pull back into about $200 per share mark. That's what I'm thinking it's more likely to do. So again, apologies, really long video, but thank you for watching. We have to cover a lot of material, some really key dates coming up tomorrow and next Monday. And as always, good luck, good trading, and speak to you guys soon.